She says, yes. Hello, how are you?
Hi, good. How are you?
Good, good. Some guy said I should be selling out of the money weekly calls on Tesla. Should I be doing that?
So I don't sell calls at all. I always buy calls, buy puts. Personally, I don't think the selling side has more risk in my opinion. So I don't usually sell calls at all. So that's just my personal 2 cents on it.
Right. I don't either. Like I don't either because I don't like getting called away and stuff. I
Yeah,
don't know. So I just buy. That's my personal 2 cents. I like your background.
thank you.
All graphics. You see it? So yeah, I think Spencer is gonna come kick me off in a second, or what happens next, Mitch? Are you there? Because I
Just
think there's
give
an
me the boot,
intro.
man.
Yeah, give me the boot, Mitch. Mitch is back from a 1 month vacation, Massey. I don't know if you met Mitch
I
before.
know he
He
left me
was,
by myself.
yeah, he went away for 1 month. I don't know if they'd have put me in Siberia to be away for a month like that because I would miss us too much. But we miss Mitch so much. So maybe it was only gone for like a few days, but it felt like a month. So I keep saying a month because my new thing is what it feels like. So when you're at a restaurant, you're at the dentist or the doctor, and you're waiting for a long time. 10 minutes feels like 50 minutes. So that's my new thing.
True.
You get my point.
Yeah, very true.
All right. Well, guys, I'm going to head off. You guys hit the like button, share it with your social media. We're continuing all day, every day. And here is the next show. Nice talking to you.
Thank you. Hi guys, welcome back to Options Advantage. All right, guys. So welcome back to Options Advantage. In today's show, we're going to go through some market movers. And then for options learning, I'm going to discuss exercising your contract. So let's go ahead and get started with our market movers for the day. Money work. All right, guys. I'm just going to share my screen. And first, we have Twitter. So Twitter announced their CEO, Jack Dorsey, announced a 500 Bitcoin. They're putting 500 Bitcoin into a trust that will fund the development of Apex crypto in Africa and India. So with that news, Twitter's earnings has a lot of catalysts behind it. Twitter actually ran today really nicely. It is currently at all-time highs at that 73. Right now, that is Twitter's all-time high. Personally, I do think that Twitter will continue this run. It kind of is flagging right now on the hourly and also on the 30-minute chart. If you take a look, slight flag on Twitter. It could potentially run into the rest of the day. If you look at Twitter's options chain, I was just kind of snooping around. You can see that it has a huge amount of open interest on its strike prices further out. So into that end of March kind of expiration, we can see that there's a lot of open interest, more than what is kind of normal, I guess you would say, if we look at kind of next week's open interest on February 26th, you can see is not as high even on those further out strike prices versus a little further out, couple more weeks. Twitter does move a little bit slower than, say, for example, Amazon or Tesla. So you would want to give it time. I do personally think Twitter will, in the next several weeks, can potentially hit that $100 mark, slowly building up OI and volume on those strike prices. So definitely a good watch for Twitter. If it does close above this high today, we can see Twitter continue into the long weekend. Personally, wouldn't swing into the long weekend just because of Monday being off, but Twitter should be one that you watch. It's not good for scalping too much because it does move very slow during the day, so your premium is not going to fluctuate as much, but definitely a good trade for a day trade or a swing trade on Twitter. Then we have Disney. So Disney actually reported quarterly earnings. They did report a loss on their quarterly earnings. However, their subscriber count was increased by 21 million just in the Q4. So Disney did run after they reported earnings. However, with the entire market was a little bit choppy today. ES and NQ didn't really find direction until later in the day. And Disney did drop. I do think that Disney still has a lot of upside momentum If it's able to hold above 185 and 183.50, which I have levels here on Disney, especially at that 183.50, if it's able to hold above that, we can potentially see a bounce. If it starts to come down towards these levels, watch for a bounce on Disney. If it breaks, obviously we're going to see more downside to it. However, personally, I do see Disney potentially bouncing here. Needed a little bit of a pullback. The 198 is its all-time high. So you can see that 198 level is its all-time high. So again, Disney, if it's able to hold that 183.50 level, we can see it bounce back up to the all-time highs. Disney too, if you look at let me move this to Disney. At the options chain, we can see some open interest building on those 200 strikes here. You can see 200 strike open interest and volume for next week. We can see potentially Disney hitting that 200 level as well. And then we have NVIDIA. So NVIDIA, I really like. It has been holding its levels even with the NVIDIA follows really, really closely to the NASDAQ, which tracks the top 500 stocks in this the market. So NVIDIA follows very close to the NASDAQ and ES, and even with the NASDAQ pullback and the choppiness, it has been able to hold its levels. Now, with NVIDIA, I'm watching it at this 595 level. If it's able to close above 595 today or 600, we can see more upside to NVIDIA. The 610 is a strong level of resistance on NVIDIA, so you can see here today right now wasn't able to break that 610 level at all. If it's able to hold above the 610 level, we can see a lot more upside potential prior to their earnings report, which is the 24th of February. So pay attention to that. On top of that, there was announcements of overall chip shortage, global chip shortage in the auto industry. So stocks like NVIDIA and AMD have been obviously rallying due to that news. With this earnings coming out, I think this is a potential mover into the rest of the month and potentially March as well. So we'll be keeping this on watch. And now we're going to go ahead and move on to some options learning. All right, guys. So today we're going to talk about exercising your options contract. So most of you pretty much know if you're trading options, you're just buying calls and buying puts. What you're looking for is a premium flip. So the premium moves, you then sell the position, you close the position, and take the profit off of the premium fluctuation. That is what we usually do I usually do as options traders, kind of the most basic way to trade options. There are a couple options for you once your contract is in the money. So what that means is when you're looking to exercise your contract, say for example, your contract is reaching the expiration date and you don't want to necessarily close the contract, you kind of want to hold on to it or kind of find another way. An option for you is you can exercise the contract. What this means is at the expiration date, if your strike is in the money, you can exercise that contract. It will automatically exercise for you once the expiration date approaches and it ends, obviously. So say on the expiration date, say today you have a contract expiring today. You have a call contract. Your call is in the money. When it's in the money, what that means is that the stock price is greater than your strike price. That is when your options call is in the money. If your options call is in the money and you want to potentially buy those shares of the underlying asset because you think that the stock is still going to move to the upside, you still think that the stock has more upside momentum, and you want to hold on to those shares, you want to buy those shares, what your broker will do automatically at expiration if it's in the money is they will exercise your contract, which means that they will close the contract and you will end up with the shares. So you'll buy the shares of, say, for example, you have a Tesla call contract expiring today and you don't want to close it. It's in the money. Your broker automatically exercises it. You have to have the funds in your account when it exercises, or you will get a margin call if you have a margin account. It will automatically exercise and you will then own those shares of Tesla. So you will own the 100 shares of Tesla because remember, each contract is worth 100 shares of the underlying asset. So if you were to exercise that contract, that means you would close the contract and simultaneously buy those 100 shares of Tesla. On the opposite hand, if you have puts, and you have a call, if you have a put contract, what this means, and you want to exercise it, your put again has to be in the money. So when a put contract is in the money, it means that the underlying stock price is lower than the strike price that you have. That is in the money, and then you can exercise it. So when you exercise that, you're necessarily shorting the stock. So whenever you exercise your contract, or that is what you plan on doing, just understand that your initial direction that you thought the stock was going to move to is also the direction that you think it's going to continue in. So if you're going to exercise a put contract, it means that you're shorting the stock, which means that you're selling the shares at a higher price to then buy them back later at a lower price. So that is what it means when you short it. So when you are exercising a put contract, you're shorting the stock. So you think that stock is going to continue to drop and you just want to hold on to it. You think it has more momentum on the downside. You don't want to close out your contract, and you sell those shares of that stock at a higher price to then later buy them back at a lower price. Just be aware when you are exercising your options contracts of two things. One, that you obviously have that money in your account. Two, if your strike is not in the money, it will expire worthless. So if you leave it until the expiration date and it is not in the money, it will expire worthless and you will take a hefty loss on it. So your options will expire worthless. However, if it's in the money, automatically your broker will exercise those contracts for you. Even if it's 1 cent in the money, it will automatically exercise those contracts. So this is like kind of another strategy you can implement if you want to kind of hold on to shares, or if you believe, in a stock for your portfolio or whatever the case may be, and you don't want to close your options contracts during the money. Definitely go ahead and exercise them and hold on to those shares. On the downside, I think there's a lot of risk if you exercise a put option. Personally, I wouldn't do that. On the opposite hand, a call option, if you do believe in the stock on the upside, maybe you're holding it in your portfolio or like whatever the case may be, you can go ahead and exercise that contract and hold on to those shares. All right, guys. So if you guys have any questions, tickers you want to look at, put them in the comments. Let's go ahead and talk about it.
All right, I'll go ahead and I'll pull those up for you. Let's go ahead and see the questions we got here. We got one question right off the back here. This one's an interesting one, really into options. So how do you sell covered call stocks? AJ is saying that this is his level 1 in his brokerage, and Masi will be right back. Give it 2 seconds, guys. I think she hit the wrong button. She hit removed instead of add, but we'll get to this question. It's a great question, AJ. One of the things is that when you start in options, you don't get access to everything. So if this is the level 1 you had, we'll go ahead and break down this strategy. If not, I'll add myself on here and I can jump in here. Masi should be back in about 2 seconds. She's probably just getting her link there. But definitely, one of the things that I definitely tell you guys to check out is, if you haven't already, go to Masi's page on YouTube and check out her other videos. She really breaks down multiple strategies and options. We had a show that we broke down theta. We were learning delta. We did options volume and open interest. As you guys can tell, Masi really pays attention to the open interest. So if you haven't checked out open interest before, definitely learn a little bit about that and why it affects the option pricing. And essentially what you need to learn is kind of the premium here. I'm going to go ahead and pull up my screen as we get Masi back. I'm not sure where she is right now, but just going to go ahead and pull up a screen here so that you guys can see something here. All right, so one thing I definitely want to show you guys, and then we can take a look at some of these tickers that are being mentioned. If you have a ticker, let me know, guys. I'll definitely pull it up right now. Seeing some people mention auto and can. Let's take a look at that. Auto. All right, so Auto Web here. While we get Masi back, I'm gonna check on her and make sure we didn't lose her there. All right, guys, so I'll take a look at this Auto Web here. So Auto, one of the things that you see here is kind of this trend line that you could draw. I would take a look here on the daily chart, and with Benzinga Pro, you can just hit Alt T and then click. All right, there you go, guys. And then I'm going to be able to draw a trend line now. I'll draw this trend line down here, and I could clearly see this kind of downward trend line that we're bouncing off here. And then let's go ahead and let's take a look here. So one of the things I can see is that we bounced off of this 250, went up closer towards this kind of 440 area, now bouncing off this $3. I'm going to take a look at this 350 and see if it continues on up towards that $5. One of the things that I'd see is that you had this volume spike here on this 19th, on the 20th here of January, where it traded 4 million shares traded. So look for that volume to kind of continue, because it really dropped off after that volume. The next couple of days was only about like 170 shares traded, and the biggest one I'm seeing there is about under 600,000 shares. So definitely take a look at that, guys. Look who we got back. Hey.
Sorry about that.
All right. So we were taking a look at auto, but we had a really great question. So I broke down that auto right quick.
Okay.
So we got a question from AJ about how do you sell covered calls stocks? So how do you do a covered call? Maybe
Okay.
pull up an options bracket and show us how you would attack a covered call.
Okay, so when you want to purchase a covered call, how it works is if you hold on, let me share my screen. So basically it's a strategy that you utilize when you're trading options is you buy the shares of the underlying stock. So say, for example, you want to do a covered call strategy on Apple. You would buy Apple in increments of 100, because remember, each contract is worth 100 shares. So you would actually buy the shares of Apple in 100, and then you will sell a call contract for every 100 shares of the stocks that you own. So say, for example, you own 500 shares of Apple, you would then sell a call contract, 5 call contracts to equal that 500 shares of Apple that you have. Personally, I don't do that often, but I can show you guys. So you would buy the shares as you have, and then you would sell a call. So let's just stick with Apple since that's what we're talking about. You would sell the call option. So if you right click here, you would sell. So instead of buying, you would sell however you want. So you'd sell a single call option on Apple if you have 100 shares. What this does is that you'll end up making money off of the premium if the buyer of the call options pays you. So pretty much if the market is in a kind of consolidation or sideways movement, you can potentially make profit when you sell covered calls if it's in a sideways movement as well. So that's kind of, it's not necessarily hedging, but you can still make a profit in a sideways market when your shares aren't moving necessarily. So that's kind of a strategy you can implement when you're trading options as well. So again, like I said, if you would buy the stock, or if you even have the stock right now in 100 shares, because each contract is worth 100 shares, you would then per 100 shares sell 1 call contract, and that is a covered call. That is what a covered call is. You would sell 1 call contract per 100 shares that you own. So if the stock is in kind of a sideways momentum, not really moving much, you could still potentially make money off of your covered call strategy. All right, so let's take a look at some more tickers or questions you guys have.
Yeah, let's take a look. Looking through here, seeing some mentions of Tilray here.
Okay.
So we could take a look at that stock, and then I got a strategy for you to check out.
All right, so I know over the past week, there was some momentum in weed stocks just with the Biden administration implementing different things. And so weed stocks were on a rally over the week. Personally, like I said, I think we talked about Tilray a couple weeks ago as well. I don't necessarily like stocks that move in such volatile increments, because I know a lot of people, what happened here is that they did think that Tilray would continue its momentum on the upside with whatever this new administration is looking to implement. However, what you can see happen is the same move that it made in about, let's say, 2 days here, it looks like 2-3 days, it then made the same move on the opposite hand in 1 day. So it dropped the same amount that it moved in 3 days, it dropped in 1 day. So this is a really, really risky type of stock to play. You have to make sure that you understand the momentum. Quick in and out scalps. I would not hold stock like this long term. I would not buy options on it long term, because the IV on an options contract with volatility like this it's going to crush your premium. You're not going to make a profit, where you'll end up taking a very hefty loss. Personally, I wouldn't touch a stock like this. If you are going to buy weed stocks, I would, like right now it pulled back. You could potentially buy Tilray shares and hold on to them longer term. Obviously, with the new administration, there is longer term profits to be taken from weed stocks. But like I said, trading options on it is extremely risky.
All right. So looks like we got another question here in the chat, asking about playing options into earnings.
Okay.
So would you like to play options into earning? Is that something that you look for? And specifically, they're looking at Palantir earnings. They're coming out on Tuesday. Oh, and if you would play in earnings, are you more of a kind of couple weeks out into that earnings, or more the week of the earnings? That's what I would add to that question.
Okay. So with earnings, there's a couple of things you should know. So one, the week before earnings, a stock, because there's anticipation of that news, that catalyst, there's going to be more volume. There's going to be a lot of liquidity, a lot of trading going on that stock. So how I approach earnings with options is the week before the stock has earnings, or like a week and a half, 2 weeks before, I'll start to keep that stock on my watch list, because what happens is the stock will either dump prior to earnings or will continue to rally. For example, I want to say Disney ended up rallying before earnings. Nvidia, prior to earnings, I do think that it'll rally. You can play it for the 2 weeks before earnings that it rallies. However, I would not play an options contract through earnings unless you have like a month or a 2 months out expiration. The problem is, with that earnings report, there's anticipation, and whenever there's anticipation of news, IV spikes. When IV spikes, so we can look at PLTR here and look at their IV right now. Whenever there's an IV spike, so you can see PLTR, this is obviously today's expiration, so that's why the IV is a little bit lower, but you can see the next week's expiration here has huge IV on it. What this is going to signify is there's going to be a lot of volatility in those premium contracts, a lot of fluctuation in the premium contracts. So even if the stock ends up moving in your direction, if you have a call and PLTR kills their earnings, it moves up, unless it's a strong move on the upside, even with the IV so high, it'll still crush your premium. So what I recommend, play the stock, keep it on your watch list for the week, 2 weeks prior to earnings. And then if you want to hold it through earnings, either hold shares of the stock or buy at least 1 to 2 months out expiration, so that the IV doesn't crush your premium and you still have some premium gain on that stock. But don't hold it through earnings on a same week or even 2 weeks out expiration. That's not going to give you enough time with the premium and IV being so high. Buy at least a month to 2 months out. But playing it through earnings is always a gamble. It's 50-50 either way. Even if it does go in your direction, it's still the premium, because the IV is so high, your premium is going to fluctuate too much and it's going to crush your premium. So don't hold same week earnings. It's never a good idea with options. You can hold shares, but not with options. Makes sense? Yeah, play the run up into earnings. Tiger Woods just said that.
All right, perfect. Well, we got a question here from Janet Lowe. How do you evaluate kind of the volatility levels between what is like kind of cheap and rich in that area? So what would be kind of the low volatility, and what would be that high volatility in that IV volume?
So IV depends on whatever stock you're looking at, and then usually IV over 80 to 90% is high implied volatility. You want kind of a moderate implied volatility whenever you're scalping or day trading, anywhere from 50 to probably 80% IV, depending on the stock. Some stocks have very low IV because they're just slow movers or there's not a lot of news around them. And then there are stocks that have normal IV of 80 to 90%. For example, stocks like Tesla, their normal IV, whenever you look at Tesla's IV, if there's no news anticipation, it's always around that 80, 90%, versus stocks like Apple, Twitter, it's around 40%, 50% IV. That's normal for that specific stock in the way that it moves. When you see stocks with IV over 100, that is when you start to see too much. It's too much volatility in that specific options contract on that specific whatever week you're looking at. Usually the IV on stocks are over 80, 90, 100% is because there's news anticipation. So PLTR, they're anticipating their earnings next week. I think even Disney, if we look at it today, it may still have high IV, had really no. So you can see Disney's IV is a lot lower than even PLTR's IV. If you look at so you can see Disney's IV is around that 40% range, which is normal for Disney. It still moves in decent increments, but when you're scalping, obviously Disney doesn't move in as big increments. It doesn't fluctuate as much. So in turn, their IV isn't going to be as high versus stocks that have more volume, more liquidity, and the volume, that more anticipation in the news, whatever the case may be, IV is going to be higher. So look for that for, cheaper stocks. Their IV is going to probably be around that 40 to 60% range, and then stocks like Amazon, Tesla, any volatile stock where they're going to be a little bit higher, closer to that 100 range, and anything over 100 is high IV. So I would be careful and watch. You'll see that the premiums on those specific stocks are going to be a lot more jacked up versus how they normally are.
Perfect. And now we got a great question here about Netflix. So what they're trying to do is mainly do like kind of a put analysis here on Netflix. What do you think about a put here? It doesn't say that they're going to buy or sell one, so I'm guessing it's buy a put here.
Okay.
So if you want, Austin, you can clear that up in the chat, and I'll let Masi know. But yeah, he said, did I miss Netflix put analysis, or is it a bad idea? Cool. Either way, he wants to just know your opinion.
All right. So Netflix had a gap fill on the daily chart a couple weeks ago that it ended up filling for the most part, and now it's kind of holding this uptrend. Right now, from what it looks like, it is still kind of holding that uptrend. However, today it does look like it slightly broke below this trend line that I have set on Netflix. Personally, I wouldn't touch a put on Netflix unless it drops below the 540 level. That used to be a strong level of resistance, which is now going to be a level of support. So if Netflix does drop below 540, again, I don't know if you're buying like for a scalp or if you're looking for kind of a swing trade. For a swing trade, I'd wait for 540 for today. For today on Netflix actually does kind of is squeezing right now. So, and it's been holding below its VWAP, has a nice little intraday level here on the downside. I would probably, if I'm looking for a scalp on Netflix, or if I'm looking to swing it maybe into the weekend below 550, I would round this down to 550. Below 550, you could buy puts on Netflix for probably a scalp. It's 230 now. So if you're going to scalp it, I would buy next week expiration. Or if you're going to swing it, obviously next week or a couple weeks out expiration. But if you're going to hold it a little bit longer, I would wait for the 540 break on the downside for Netflix puts.
All right, guys. So I'm seeing in the chat here mentioned ACIC. That's definitely one to mention more on the SPAX attack that comes on from 11 to 12. Not really an options trade there. I know it's mentioned a couple times, so I'm going to go ahead and skip that. But just wanted to give you the shout out that if you want to talk that one, I think SPAX attack would be the best move for that. All right, so let's go into one last one. We're getting mentioned about NVIDIA again. So what's your idea here on NVIDIA? How would you attack it if you were to take a trade today? And to make this a little bit better, let's call it our trade idea of the day.
All right, so just looking at NVIDIA's 5-minute right now, I had a level on NVIDIA below 595. It looks like it's slowly starting to break that towards the end of the day. I just want to see where the NASDAQ is right now. Could potentially be following the NASDAQ. All right, so it's not right now following the NASDAQ because the NASDAQ is holding. SPY is kind of holding as well, which means that NVIDIA is moving against, not against necessarily, but there could be, I think someone noticed that there's some negative news on NVIDIA right now. So it could sell off towards the end of the day. It did make a nice little move up, and it has been on a kind of uptrend over the past several days. So it's pulling back now, which is good. I just want to see it on the hourly. Yeah, so below 595 was my put potential play on NVIDIA. It looks like it's breaking 595. If it holds 595 on this 5-minute chart, which I think it did, or if this 5-minute holds below 595 on NVIDIA, we could buy puts here. It's a good potential play down to, could actually even fill this little gap down to 590, 591-ish. So if it holds below 595, we can see NVIDIA go to 590. And then after that, we have a level at around, 590 and then 587 on NVIDIA. So NVIDIA looks pretty bearish right now. We can see it's been holding that 9-day EMA on the downside today, and it wasn't able to break. So it rejected that 610. 610 is a strong level on resistance, rejected 610. And now it's on a downtrend. The 595 is a strong level of support. It looks like it's holding below it right now in the 5-minute. It just needs more volume. Volume's kind of low on NVIDIA. So pay attention to the volume. If it holds this 5-minute candle here, could potentially take puts on NVIDIA.
Yeah, one thing I'm seeing here, and I'll pull up my screen to kind of show you, on the video on Benzinga Pro, it's showing up multiple call sweeps near that 600 strike. So there's 600, 610, and 605 there, and they're all around this kind of like 1 p.m. to 1:50 timing. So definitely, you're seeing some call sweeps there on that 600. What could that potentially mean there?
It
At
could
least
mean,
for me, that's uneducated on those.
yeah, so it could mean that people are just buying the dip on NVIDIA. So they're waiting for the stock to pull back. There's some profit taking potentially since it did hit all-time highs. And now people are potentially buying NVIDIA back up until its earnings. I'm looking at the options chain for next week on NVIDIA. It does look like it has a lot of open interest on around those 600 strikes on NVIDIA. So it could potentially mean that people just bought it back up. It's now followed the market a little bit today, kind of pulled back, and potentially people are buying it back up until its earnings. But even till the end of February, there is a lot of open interest on that 600 strike on NVIDIA. So could potentially be, if you're looking to swing it a little further out, 600 strike is a good swing potential back up to all-time highs in lieu of their earnings.
Perfect, Masi. Now, where could they find you if they want to go ahead and get some more options education?
You guys can follow me on YouTube, Instagram, and Twitter at Masi Trades. Sorry. And yeah, you guys can just follow me. I go more in depth on my strategies, how I take my positions on my YouTube. So make sure you guys check it out at Masi Trades.
All right, guys, and we'll see you next time on Options Advantage.
Bye.